Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, October 17th, 2016, ending Friday the 21st. This is options expiration week already, believe it or not. Not a very interesting week, unfortunately. This last week, Monday, we knew was going to be bad because of the bank holiday, Columbus Day, but then Wednesday was Jewish holiday, and Friday was particularly slow. Tuesday was probably the better day. Futures were decent, but stocks were and just not a lot of volume, as you'll see the numbers here when we get to it. So here's the ES front month futures contract. This is the daily chart of the S&P in futures form. This is the proper technical way to look at the market. Still sideways, been here for over a month now after the 13 sell signal took us down for all of 2 days. Still stuck between the risk line, which is the pink line above, and the red static trend line, which is supposed to be the target. Obviously, we're lower than the sell signal, and obviously a lot of time has passed, so you start to wonder how much more you got here. But it is that time of year, you never know. Let's go through the major indices for the last couple of days. So crude oil on Friday, anyways, was down 12 cents to 50.32. Gold loses $5.60. S&P cash index on Friday literally closed up 43, and you'll see what happened. It gapped up and then came back after Thursday being lower and coming back. Nasdaq 100 gains 5.39. You can see the back and forth there. Came very close to the red static trend line on that one on Thursday. Stocks up 6, not a big deal. Biotech's down 54. That's new lows for the last few months on bios. As go banks and bios, so goes the market. That's the old expression, right? The VIX loses 57 cents on Friday after being up on Thursday, closing at 1612. That's back up a bit. Interesting that the VIX is on the rise and getting higher readings for us when the market hasn't really rolled here much. We're certainly not lower than we've been on average. The 10-day moving average of the trend is at 0.97 with Friday's 1.2 number. Let's count back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the next number to come off will be a number around 1. Yeah, but we're nowhere near the 0.85. We had dipped down near 0.85 on the 10-day moving average. Started to get looking like a sell signal, and then it wasn't. Nasdaq volume on Friday, only 1.45. Thursday was 1.6. Tuesday had been 1.65. Wednesday with the Jewish holiday was 1.4, and the bank holiday here in the U.S. only 1.25 on Monday, which was equal to the bank holiday back in March where the market was open, that's actually the day after Easter. And so, yeah, you can see that was the lightest volume day of the year, basically, so that was useless. Also disturbing, though, is the 10-day moving average down to 1.4, just about 1.5 billion shares. That's almost the lowest point of the year for volume. Not normal for October, I can tell you that right now. Advanced decline ratio on the Nasdaq, literally 31 more stocks down than up. That's about as even as it gets. Advanced decline on the New York was plus 47. Google gains 52 cents. Apple gains 65 cents. Amazon loses 6.32. Netflix up $1.24. All right, let's look at the intraday action for the week, though. This is 10-minute candles. Remember, again, Monday was the holiday, so that's why the volume looks so low on Monday. Gapped up, dead flat, nobody around. Tuesday, gap back down. Notice that's technically an island reversal formation, the way we gapped up and left all of Monday above. Tuesday, we gapped down, head lower, get a 13 Comer for the bottom, come back up a little bit. Wednesday, again with the Jewish holiday, pretty much dead flat. Thursday, we gapped down, pushed just a little lower, and spent the day trying to climb out of it. Didn't quite fill the gap. Rich commented that he thought we would on Friday, and sure enough, Friday we gap up, so that fills the gap from Thursday morning, and then we head back down eventually after a very flat hour, just over an hour to start with. Volume was horrible. Come back down, fill that gap too. So all the gaps are filled except for the one back from Monday going into Tuesday. Look at the Nasdaq side, not much different. All right, so after that, what do we have to look forward to in the week ahead? Let's look at the economic data. There's a couple things to keep in mind, and this doesn't help, unfortunately. No holidays and stuff like that, but it's the start of core earnings. Tuesday is the first day, so Tuesday, Wednesday, Thursday, Friday of this week, Monday, Tuesday, Wednesday, Thursday of the next week are the core 8 days of earnings. Earnings releases coming out, and here's a look at the economic data. You can see all this. Industrial production capacity utilization on Tuesday is the CPI. That's a big one. On Wednesday is housing starts and building permits, the Fed Beige Book. Thursday, initial and continuing jobless claims with the Philly Fed, leading indicators and natty gas. No data Friday. Because Friday's expiration, we could have obviously an issue in terms of the options unraveling on Wednesday. We'll look for it. But again, remember, earnings are the key. Watch these stocks. Don't hold them overnight if they're reporting or if something in their sector is. We'll talk about that every night going in. Charts, as usual, brought to you by eSignal. Have a great trading week.